the ETFs got approved. And people thought, oh, well, when the ETFs are approved, it may not be good for you because you're trading at a premium. But in fact, the opposite was true because we have a lot of Bitcoin and we're an operating company. So what you can do, or what MicroStrategy can do that an ETF can't do, is you can borrow against our stock. It's marginable. We can leverage the stock. You can option the stock. We have options, puts and calls. You can short via puts. You can go long via calls. And you can buy our debt or trade it, and we can sell the debt. So all the other spot ETFs are not marginable. They have no options, and they can't issue equity capital via shelf registration. They really can't trade at a premium. They get basically arbitrage back to net asset value, and they can't issue convertible debt. Now, why would you want to issue convertible debt? Well, because if you're a convertible arbitrager, you want to find a company with three things. You want volatility, massive volatility. You want liquidity. You want to be able to trade in the spot market in order to hedge out your exposure. And you want durability or transparency. You want to know that the company is a going concern, is going to continue. So if you think about companies like GameStop, they were very volatile and liquid, but that trade doesn't go on for years and years. And with our company, we're basically holding a bunch of Bitcoin. Everybody knows we stand for Bitcoin. Everybody knows we're going to buy more Bitcoin. Everybody knows we're not going to sell the Bitcoin. So we have credibility and we're durable. The S&P index has a volatility of about 12. Gold is 10. Real estate, 18. Apple, 20, 22. Tesla, 45. Bitcoin, 75. MicroStrategy is levered Bitcoin with a passionate shareholder base, 120 to 140, 150 something, but more than 100. Okay, so if you know the Black-Scholes equation, if you plug volatility in the Black-Scholes equation, it makes the option more valuable. Nobody wants to buy an option that has low volatility. So we stumbled on a very interesting opportunity because we're an operating company that can issue convertible debt, and we were able to appeal to a variety of investment classes. For example, one class of investors is public company investors. They want Bitcoin exposure. They can't buy Bitcoin. They can't buy the Bitcoin ETF. They can buy a company that does something with Bitcoin. It's like I can buy a gold miner, but I can't buy the gold and I can't buy the gold ETF. Yes. So they have billions of dollars of capital and they have to invest in an operating company. And we became the most notable, premier, and the most transparent company. You know, with MicroStrategy, we're going to buy Bitcoin, keep it, and try to accrete more Bitcoin per share. There's another class of investors, the Bitcoin maximalists. They love Bitcoin, but they have money in their 401k, and they can't buy Bitcoin with their 401k, but they can buy a stock like MicroStrategy. Now, why would they like us? Well, would you like to be able to borrow money for 7 years for no interest?
Exactly.
And buy
it's
Bitcoin?
Like free money.
You would like to, but you can't.
Yes.
But we can. So if you like that prospect, they would buy our stock because they feel like they're along for the ride, right? They're getting advantage of our ability to get cheap capital to buy Bitcoin. Another reason is, would you like to borrow against Bitcoin from your bank? Well, you can't because the bank doesn't take the Bitcoin as collateral, but MicroStrategy stock is marginable. So you could pledge it as collateral and borrow it at SOFR plus 50 or 100 basis points. So that way you get to keep your Bitcoin and take a pretty cheap margin loan against it. So some people like that. A third class of investors want volatility. There's something called MSTY. It's like an ETF that sells MicroStrategy volatility.
Okay.
It generates 100% plus dividend yield. Okay, so if you just sell the calls, you could own the Bitcoin and sell covered calls out of the money or in the money, and then you generate some yield. So some people like that.
Is it issued by you or by someone else?
No, it's somebody else.
Somebody else. Okay.
Other people. But the reason that they do it against us is because we have Bitcoin and we have options. There are billions. There's like $30-40 billion of open interest in the MicroStrategy option market. Well, there are no options on the spot ETFs, you see. And you can't borrow against them. They're not marginable. So we had this company that was optionable, marginable. It was high volatility Bitcoin equity, but it's also highly levered Bitcoin equity. So Bitcoin would go up and we would go up more. And so if you like Bitcoin, then if you like the idea of taking all your money and buying Bitcoin, you would like the idea of borrowing a lot of money for free and buying even more Bitcoin, right? So,
yes.
So a lot of those people decided to buy in as equity holders. Then you get the haters, right? People that don't like Bitcoin. Well, if you want to short Bitcoin, then you could short our stock.
Yes, exactly.
But what if you wanted to short the stock with options and puts? Well, there aren't puts on the spot product, but there are puts on MicroStrategy. So you could go and you could buy, and there are billions of dollars of short options traded on our company. So there's those people. They just hate Bitcoin. Then there's people that are they're not sure. They hate our business. So like, we're going to short you and buy Bitcoin.
Okay. Yes, exactly.
Right. And so you have those arbitragers. And then there are people, they don't even know what Bitcoin is. All they know is they can generate 100% yield.
It's going up. Yeah.
And then there's people that are the super option traders and they think, well, the options 6 months out are mispriced versus the options 3 months out. So I'm going to sell the options 6 months out and buy the options 3 months out. And I'm going to take advantage of that. And then you have the fixed income investors. They can only buy bonds, so they could buy our bond. And then you have the convertible arbitragers. They need a convertible bond and they're going to actually short the equity, buy the bond, capture the yield. And then you have people, what if you wanted to buy Bitcoin at the all-time high, but you don't want to have the downside? What if you want 80% of the upside, 20% of the downside? Well, if we sell a bond and it's a $500 million bond, but we've got $5 billion of unpledged Bitcoin, you have this collateral, like 10-to-1 collateral, and you could say, well, Bitcoin would have to trade down by 90% before I'm in trouble. So if you're risk adverse and you want Bitcoin upside, but you're afraid to take 1-for-1 downside, you would buy the bond. And of course, you can construct any type of instrument you want by trading the bonds, the equity, and the options, and you construct whatever you want. So what happened then is MicroStrategy stock started trading a lot, billions and billions of dollars a week, and then billions of dollars a day. And then the options started trading. And so then we went back to the market and we did a bond issue, and I guess it was going to be about 500 million, but it got upsized and became 800 million. And we did that at 62 basis points at a big premium. So we basically sell the bond for 62 basis points, and then we buy the Bitcoin and we capture the yield difference, or we capture the premium. But then, of course, we basically borrowed $800 million for 6 years to buy Bitcoin. If Bitcoin goes up 24% a year, then you could double your money twice. So maybe you actually make $2.4 billion on the back end, some hundreds of millions of dollars on the front end, and you do it while you're paying 0.5% or 62 basis points interest. So we did that. People liked that. The stock traded up. Bitcoin traded up. We announced we closed that deal on Monday, and we thought, why don't we just do it again? So we went back and we did it again on Thursday. And we did 600 million on Thursday, and we did 1.4 billion total in that 2 weeks. And why can we do that? Because it's very hard to find a company with 100 vol with billions of dollars of liquidity where you understand the business model. And we built a lot of trust and credibility with our investors, because they all know what we're going to do, right?
Yes, exactly.
I'm very famous for you do not sell your Bitcoin.
Yeah.
We're going to buy more Bitcoin. We'll keep buying Bitcoin. If we were not transparent, if I was not predictable, then you don't know what we're going to do for the next 5 years. So you're not going to want to take a 5-year bet or even a 1-year bet. If you hate Bitcoin, you want me to love Bitcoin. Because the last thing you want to do is short $100 million of our security and have me say over the weekend, I reversed the trade.
Even if I hate you, I want you to be like trustful that you're going to be buying, you say. Yeah.
But the opposite is also true, which is I don't mind if you hate Bitcoin. If you short our stock, that just means you're buying it in reverse. Like you're going to short it now, but eventually you'll buy it later when I need you to buy it. And so what we did is we created an operating company, and we realized at some point now we're a Bitcoin development company, like a real estate development company. It's like if you took a company public and you sold billions of dollars of securities to buy those buildings. The trick is, can you get the cheapest financing? A public company has cheaper financing than a private company because it's more trustworthy and transparent, right?
Yes.
You have to make thousands of pages of disclosures. You're bound by a lot more restrictions. So a public company in America is probably the most trustworthy of a corporate vehicle for issuing security and raising debt. So you would have an advantage if you were a public company and you were doing real estate development. But remember what I told you about volatility.
Yep.
The volatility of real estate's 20 or 15. You can't sell 100 vol equity and invest in 20 vol assets because at some point the volatility in your equity goes to 20. You see?
Mm-hmm. Exactly.
What we were doing is selling the 100 vol plus equity, and then we're buying a 75 vol asset, levering it up to make it back into a 100 vol asset. So if you're actually creating a volatile balance sheet that will drive a volatile stock, that creates the options market, and that creates the opportunity to raise money for less than 1% interest unsecured. Now, that is unique to Bitcoin. Maybe it's the first time in the history of Wall Street, you have a property asset or a commodity asset that is appreciating because it's hard cap 21 million, right? It's a scarcity.
Yes, exactly.
So it's appreciating and it's volatile. And most people in corporate finance are taught to avoid volatility. They're taught that volatility is a bad thing. So they get rid of all their capital. And if they invest money, if you had $1 billion on your balance sheet, you wouldn't buy something volatile. You would buy treasury bills. But treasury bills are volatility 5. Like they're the least volatile thing you can possibly buy. Okay. So how do you arbitrage that? And so you think about a big company. A big company, it's run to have visibility for the next 3 years. I give you guidance for the next 3 years. I want to know what I'm going to make a year from now. I tell everybody, and then I have no capital on the balance sheet that's volatile. So there's nothing that's going to move, and I consider that success. But if I know what's going to happen for the next 12 months, why would I trade the stock every day? I can just make a decision once a year. So the result is MicroStrategy stock trades more than all these big large cap companies. Right? We end up, because, McDonald's and Coca-Cola and Nike and Walmart and Pfizer, they're all very predictable.
Yeah.
And predictable is good for people that are afraid of the future. But predictable is awful for the options market and it's awful for traders. So in this particular case, what we've done, it represents a lot of different paradigm shifts. First of all, it's based on Bitcoin, which is a paradigm shift. It's a digital commodity instead of a physical commodity. That's a big idea. $1 billion of digital energy instead of $1 billion of oil. The second big idea is Bitcoin does one better. It turns the commodity into a scarcity. It's the only commodity in the world that's got a cap of 21 million. Every other commodity like soybeans or oil or natural gas or gold is infinitely producible. So there's a lot of price supply elasticity.
Exactly.
That's why it doesn't make sense to buy billions of dollars of oil and hold it for 10 years. That's why we don't use oil as a treasury reserve asset because there's too much of it. So Bitcoin is a scarcity. That's the second revolution. The third revolution is using Bitcoin as a treasury reserve asset instead of sovereign debt, instead of treasury bills. Well, Treasury bills have an effective after-tax yield of 3%. The cost of capital of a company is probably 12% if you basically take the monetary inflation rate and add in 4% for risk premium. So if your cost of capital is 12% and you're investing at 3%, you're losing 9% of your capital every year. Well, Bitcoin's been appreciating at 20 to 50%. So we're not doing a third or a quarter of the cost of capital. We're doing double to triple to quadruple. So if you have a treasury asset which beats the cost of capital, then it's not dilutive to carry the money. It's accretive. Like the conventional wisdom is when you sell stock, you dilute the shareholders. But in our case, the more stock we issue or the more money we raise, the more we accrete. And so hundreds of thousands of companies have assets on their balance sheet which are dilutive. And Bitcoin is the first major asset which is accretive. So we turn the entire treasury strategy upside down by actually accreting assets. Today we have $15 billion of Bitcoin on the balance sheet. And the operating company generates $75 million a year in cash flow. And the operating revenues are $500 million. So we made the balance sheet the primary part of the company instead of the P&L. Everybody else wants the balance sheet to go to zero or negative, and they want the P&L to be the primary part of the company.